If you make $100,000 or less and you think that building long-term wealth is out of reach, well, think again. My name is Darius.
And I'm Carmen. Welcome to the Wealth Nation channel, where financial freedom isn't just a dream, it's a reality. Now, before we jump into this information, I want to make sure that you take a moment to subscribe to our channel so that you don't miss any videos in the future.
Now, the topic of conversation today is how to maximize your money. Now, in the intro, we talked about if you make $100,000 or less, but if you're on the other side of that coin and you're the 15% of Americans who make more than $100,000, this video is also for you. Because one thing that we understand, or one thing that exists, is Henrys, high earners, not rich yet. Reason being is because regardless of the fact that they make over $300,000, they still live in paycheck to paycheck. One of the reasons is they don't understand how much they're spending on a monthly basis. They're only maintaining the minimum payment to make sure that they're able to sustain their lifestyle.
Absolutely. So what we want to make sure that we do today is we go through a holistic journey of explaining exactly what you need to do to build and sustain wealth. Now, wealth is going to mean something completely different to every single person who is watching this video. So that's why we want to make sure that you really get in tune with what does wealth mean to you, because wealth could mean just an extra $1,000 a month for one particular family, or wealth could mean an additional $10,000 a month for a family. So you have to get really clear with what you want as it pertains to your financial freedom. What is going to allow you to sleep better at night? What is going to allow you to let all of those headaches go away? And you have to determine what that number is. So once you know what that number is, you can apply this journey that we're talking about to that plan.
Right. So what you're basically saying is we need to have a vision, and we need to hold that vision in our minds so that we can start reverse engineering where we are to where we're trying to go.
Absolutely.
And in order for us to do that, we have to put some pen to paper, or we have to take out an Excel sheet, and we have to identify exactly where we are standing right now so that we can create a plan to get to where we're trying to go. And that's the key word, a plan. There is no successful person that we've ever worked with that didn't have a plan or didn't have a vision for what they're trying to accomplish, because that is their why and why they're trying to create the things that they're creating, why they're in the business that they're in, why they're in the career that they're in, is because they're holding a vision on what they're trying to accomplish, and they have a plan for it.
Yeah, and the other thing too that Darius is noting about is that how many times do we actually spend the time and prioritize the things that we want to do in life that doesn't pertain to money, right? So our career, we know the things that we want to accomplish between the next 3 to 5 years, right? Somebody can ask you and you have an elevator speech ready to go. Or when it comes to weight loss or your health and wellness, right? You have an idea, you have a plan, you know exactly what it is that you want to do in order to achieve said goals. But for whatever reason, we don't do the same with our money, and we want you to treat your money the exact same way, because the same way you want upward mobility in your career, you want that upward mobility in your pockets as well. And you have to put your focus and your attention there, because what you focus on expands.
Right. So the way Carmen and I manage our funds and where we are right now is the 50-30-20 rule. And we talked about this on a previous video, how 50% of our income goes towards our needs, 30% of our income goes towards our wants, and 20% of our income goes towards our savings. Now, initially out of the gate, if you're just starting this, you're not going to be able to put 20% of your income towards your savings. What you have to do is start exactly where you are and work your way up to what is more feasible to you. Now, I said 50-30-20 rule. That's what it's called, 50-30-20 rule. But what I really want you to do is put that 20% first. We have to pay ourselves first, and then make sure we take care of our needs second. Now, a lot of you may say or comment, how in the world am I going to put my savings first if I don't have any money left over after I pay my bills? Well, that's the problem. Whatever the amount is, even if it's a small amount, let's say it's 3% of your income that you're able to initially start, put that 3% aside first. The only way we can get there is if we understand, if we look on that spreadsheet or the sheet of paper that we're using to track our finances, if we understand it from a big picture on where all of our money is going. That way we can increase or decrease different areas so that we can make sure that we have that 3% every single month. Or we can start adding a percentage point every single month or every time we get paid based on our habits that we've now created from tracking our funds.
And what Darius is alluding to is that we want to make sure that you realize that if you don't prioritize yourself with regards to your savings, you will always be behind financially. You will very rarely be able to come out of that dark side of having your bills control you and you not being able to save money, because really we'll get to this, but the point of you saving money and prioritizing yourself is so that you can use those funds to make more money. So the idea is this is a whole mindset shift, and it took us a while to get used to it because that's just not what we were taught or what we assumed happened, right? We got paid, we paid our bills, and whatever was left was what we thought we could save, right? But what we recognized was that was us not taking ownership, right? And that was us not recognizing our value and our worth with everything that we were doing in order to create that income. So once we started recognizing like, okay, no, we have to pay ourselves first and everything else will come second, and working through that, right? It's not just going to happen overnight. You'll have to work through some of those opportunities that you have to figure out how you're going to start paying your bills differently or how you may have to allocate your income differently. But the point of the matter is that you have to prioritize yourself and figure out what can you consistently pay yourself every single month, knowing what your income currently is.
Right. Now, the sooner we do this, the sooner we can move on to the next point, which is savings and investing. The only way you can invest is if you're saving. And if you're not saving, then it's very hard for you to invest. The reason being is because when something comes up, you're going to tap into those funds that take away from your ability to invest long term.
That's why I said you'll never get ahead.
Right.
You don't save.
Yeah. So your savings, there's no way you can invest without saving first. So those incremental increases that you have until you get to that 20%, that's the same exact way you're going to start investing your funds. You're going to start investing small and then working your way up. That's why it's so important for you to take action immediately, because the longer you wait and don't do anything and don't put pen to paper, it's going to take you even longer to get to the point to where you can invest, because this is something that takes time and it's a habit that is built up over time that allows you to build the wealth that you have for yourself, that you're holding for self in your vision.
Absolutely. Now, one thing that I want to do real quick is talk about how our journey of understanding our finances led us to this level of understanding, right? So once we started looking at our bills and saw how much money we were paying towards interest in credit card payments, we started going like, wow, we need to figure out how to change this. And then we were really within that same time frame, we were introduced to whole life insurance, and that was an asset that we knew nothing about, and we just knew that we needed life insurance, but we didn't know to what extent and what it could do for us. So with that being said, the Wealth Nation channel teaches you all about how to use whole life insurance to create financial freedom. So if that is of interest to you, then definitely click on the link below, because you will see that we have used whole life insurance to get out of credit card debt and to finance all of the areas of our lives so that we can hold more of that interest, we can save better, we can prioritize ourselves, and we can keep all of that money flowing in our own system as opposed to funding the bank's system.
Right. So in our case, we didn't have a plan for ourselves, but Wells Fargo had a plan for us, and it was to pay them 20% interest on the credit cards that we use. Mm-hmm. So how can we pay 20% to Wells Fargo and not pay any interest back to ourselves?
Yeah.
It doesn't make sense, especially when you say it out loud. But in some of our situations, in some of your situations, that's what you're doing. Mm-hmm. If you take a look at, going back to point number one, if you take a look at where you are right now and write all of your expenses down, you may see that a large percentage of your income is going in interest to someone else and you're not saving. So if we can redirect those funds, which we did with using our whole life insurance policy, and we'll put the link in the video here, is we started redirecting those interest payments back to us that came back in the form of cash flow that we started saving. Then using our savings, we started to invest into investments that made us money where we didn't have to physically go out and do it. So with that understanding of all the things that need to happen, in some instances, you may need to reduce your expenses. You may not be able to go and get your nails done because that's $150 or wherever you live. Inflation. You may not be able to you may not be able to go in and do some of those things as consistently as you would like to. We're not saying to not do it at all, but you may not be able to do it as consistently as you like to, because you need to have money saved and you need to invest those funds so that you can have those investments pay for the things that you want in your life.
Mm-hmm. Yeah. So let's draw a line back to what we were talking about before, right? So we were talking about the point of savings and having to have what we call an ABC fund or an emergency fund. So if something comes up, you're not dipping into the plan because you have something over here, right? We talk about how you need to have at least 6 months worth of your income saved, right? So if you lose your income for whatever reason, the idea is you already have a safety net. And the thing really that we like to do is to have insurance. And I consider insurance for the triple threat: an emergency, loss of income, or death, right? So if you have all of those things safeguarded and you have a plan for those, and you can move forward with disposable income, knowing that you can apply those funds to investment opportunities. Now, this video isn't going to tell you what investment opportunities those are, because again, you have to figure it out. Is it going to be the market? Is it going to be real estate? Is it going to be Bitcoin? Whatever it is, building businesses, right? You have to determine what it is that you want to do. But the idea is you need the framework in place. And that framework is having an understanding of your finances. So the 50 or the 20, as we say saving first, the 20, 50, 30 rule, right? And then you need to understand the different levels of savings that you need to have to safeguard your income. And then once all of that is taken care of, then we want you to go out and make as much money as possible, because you know that you have the framework in place. And it doesn't have to be complicated. It's very simple. And this is how you can create wealth or a peace of mind knowing that everything is covered.
Of those things that Carmen mentioned, we may be in a position where we need to reduce our expenses. And what I want you to do is realize that you need to reduce your unnecessary expenses, because the habits that we have going into our investments is the habits that we're going to keep as we start to make more money. And what's important when it comes to our habits is to make sure that we don't have any bad habits so that we can end up back to where we are. Here's the thing. There are people that make significantly more money than you, but still have bad habits, and they live paycheck to paycheck. So just because you make $100,000 a year right now, just because you may have a vision to make $1 million a year, if you have bad habits, you're still going to be living paycheck to paycheck with your $883,800. You know what I mean. Finally, the last thing you want to consider is boosting your income. Of all the clients that we have, the most successful clients are business owners. And that started with them creating an additional stream of income or a side hustle that later started to earn them more money than their actual jobs. So that's one thing that you can do, is have a little side hustle going on. And as that income starts to incrementally increase, then you can start considering, okay, maybe I should make my side hustle my main hustle. And this goes back to how we started this whole process in the first place, which is putting a small amount of savings aside every single time that we get paid and working our way up to increase that incrementally. And then we started putting that savings into investments that we started working our way up as our habits started to solidify and become permanent. We started to increase the amount of money that we were putting into our investments. Now we're saying to do the exact same thing when it comes to a side hustle. Figure out something that you are interested in and make that your side hustle. And over time, as your income starts to increase, your side hustle may end up being your main hustle.
And that's exactly what happened with Darius and I, because our side hustle was investing in real estate, and that grew into our life insurance business, where we are able to teach people all over the world how to become financially free. So you just never know what is going to happen once you actually say yes to yourself. Start investing in yourself by saving money and prioritizing your income for yourself, and then seeing where that grows and where that journey takes you.
Right. And this is a inside out approach. What we realize exactly what we enjoy doing, not what we researched online and saw that what makes the most money, is what Carmen and I really enjoy doing ourselves, individually and together. So with that said, you may have to do some soul searching on exactly what you enjoy.
And it's okay to go through thing after thing after
Yeah,
thing after
yeah.
thing, right? Because is it Edison? Edison, somebody had 100 inventions, and it was like the 101 invention, right?
Yeah, he failed like 1,000 times, and the last time is when he invented the light bulb.
Yeah, I don't even know if it's Edison. Don't come for me, the comments. The point that I'm making is
He had a vision.
He had a vision. Don't give up and keep trying, because Lord knows our family thought that we were crazy, because we probably had 7 or 8 businesses before this one, because we kept trying. And what we recognized was the difference is we kept doing things that we weren't necessarily passionate about, but we were doing things because we thought it was going to bring us a lot of money. And your heart isn't in the right place when you chase the money. The money will always come when your heart is in the right place.
Right, because I go back to where I actually started. I'm an industrial engineer, and I was an industrial engineer for Fortune 500 companies until we got to the point to where we started investing in real estate. And Carmen was in real estate at the time as a manager at her company, and we just started putting our heads together and realizing that, man, I enjoy working with you more than I enjoy working with my coworkers. I enjoy the money, but money comes to those who have a plan for it. And what Carmen and I did together is we created a plan for how we're going to make money, which is how we started to being able to sustain ourselves in the ideas that we have around real estate. And then later, as we started to realize and go a little deeper into real estate, we're understanding the financing of these different real estate deals. And now we're in life insurance because this is how we're financing our real estate deals. So
And our lifestyle.
So make sure you do the real soul searching, not Google, but find in your heart exactly what you're trying to accomplish, and then do your research as to how you're going to create the plan to accomplish the vision that you hold for yourself.
There is no time like the present to get started, right? Because just getting started doesn't mean that you have to commit to filling out any paperwork. You can just get started today by creating ideas and starting to figure out what that vision means for you. And also just learning the things that you like to do consistently. We say this all the time on the channel. You'll know the things that you're passionate about when the people who you know and love ask you for help, because they know that you're the GOAT in your family for this particular thing. So those are the breadcrumbs that you can start chasing.
Right. Now, one thing everyone needs is some place to lay their head, which is why Carmen and I got in real estate. So we mentioned that we used life insurance to invest in real estate. If you want more information on this, check out our next video.
And don't forget to own your own lifestyle.
Or someone else will.